All right, hello and welcome everyone to today's event on investing in Bitcoin for family offices and institutional investors. My name is Jan, I'm from the Disrupt Network, and I'm super excited to have three very different perspectives on this topic today. So Jan Kühne is going to present the exchange perspective from BSDEX. Milko Hensel is going to present the bank perspective from Maerki, Baumann in Switzerland. And finally, Simon from Decus Network is going to present the custodian/startup perspective. So I think after today's event, you all have a very insightful, diversified view of whether or not it makes sense for you to invest in Bitcoin or other crypto assets. So Bitcoin is just this one big example we all know, but the speakers are going to mention different types as well. Now, logistically, there's going to be three quick speeches on what to consider. And after the speeches, we're going to have a quick Q&A session. If you have any questions, you can send them to me via the WhatsApp groups, the Telegram groups, the even email if you wanted to, and I will bring them up to the speaker. Now with the WhatsApp, there was a little mishap. The first email that you got, the WhatsApp group is the wrong one. It might be full. So there's another email coming in the next 2-3 minutes with the Disrupt Blockchain WhatsApp group. So that one is definitely not full yet, so you can post stuff in there, but I'll check all of them. So if you're in any Disrupt WhatsApp group, just post them in there. And yeah, I'll bring them up, and I hope we can all learn a lot around this exciting new asset class today. So that's it from my side. I'll now hand over to Jan Kühne.
Okay, thanks a lot, Jan. I will try and share my screen. My name is Jan Kühne. I'm from the Börse Stuttgart Digital Exchange. For those who don't know the Börse Stuttgart Digital Exchange, now you should see my screen.
Yes.
Let me start the presentation here. Do you see the whole?
Yes, we see everything. You still need
Everything.
To go to
And that is to start it. That was, give me a hint, Jan here.
Bildschirmpräsentation. Yes. You were right there. Yes.
Oh.
Yeah, and now you need to go to Bildschirmpräsentation verwenden. To the left a little bit. Bildschirmpräsentation verwenden.
Oh, there it is.
Yes, this one. Yes.
Oh.
All right, now we can see it. Yes, let's go.
Yeah. As you can see at Börse Stuttgart Digital Exchange, we're not using Zoom, we have Teams. So all these tools work a little different, but we could be happy that you're not a school kid in Hamburg because they have their own meeting system and that basically screw every time. So I guess Zoom then is much better than the ones we have at schools in Germany. So Börse Stuttgart Digital Exchange, that is a subsidiary, as you can imagine, of the Börse Stuttgart. It was built up over the last 1.5 years, basically, with the mission to implement the institutional rails into crypto trading. So that is an exchange for, or trading venue, better put, for cryptocurrencies. It's regulated under the German law. Since Bitcoin is not applies under MiFID II, it's a financial instrument. There's a special stipulation in the KWG, it's paragraph 2, sentence 12, under which the Börse Stuttgart Digital Exchange is regulated. But besides that, as an exchange, it basically work like an MTF, you know, from the old world we have. And that's my role at Börse Stuttgart Digital Exchange, is to build up our institutional sales. The product itself is a product for both retail customers and institutional clients. So we do have an online onboarding for retail customers, but of course our focus is to onboard institutional clients and their customers, of course, as well. But that much for the dog and pony show of Börse Stuttgart Digital Exchange. I will try for the next minutes to go more broadly into the differences between a traditional exchange and a crypto exchange. And if the time left, then we go to some misconceptions regarding Bitcoin, not that much related to the crypto exchanges itself, but a lot of that we will go there through, touches the very essence of crypto assets and Bitcoin as an asset class. And of course, that reflects also in which ways institutional investors can approach this asset class. So what is basically the difference between the old world with the crypto and the new world with the crypto exchanges? Basically, can you see my mouse pointer also?
Yes, we can.
Oh, great. So in the old world, and that often gets forgotten because we are so used to it, and everything that happens there basically happens behind the scene, and it's a highly commoditized thing we have here. We have the investor and the bank. The bank holds the account where the fiat, euro, US dollar, whatever it is held, and the depot where the securities are held. And if he makes an order, all that goes via the interface of the bank directly to the exchange. And what happens at the exchange is something which is taken care of by the bank. And the investor doesn't have to worry about what's going on there. In the new world, it's different. The investor here is directly connected to the exchange. Usually no intermediary is in between. And that is basically due to its novelty. When the first crypto exchange came into the market, there was no regulatory framework for that. So they were allowed to onboard customers directly. In the old world, a retail customer wouldn't be allowed to onboard directly into an exchange. And of course, there was no service elsewhere than an exchange to store the asset, except only, of course, if you would do self-custody, but the exchange would store your assets in the wallet, and you would then have to open an account at the exchange or pay in a sort of an escrow account at the exchange. So the funds usually being securely kept at the bank are now held at the exchange, and the same goes for the depot. That's not held at the bank anymore. It's held in the wallet at the exchange. And that is basically how the crypto exchanges evolved, and lots of the crypto exchanges we have out there are still operating in that way. So with scarce regulatory framework on that, and of course all the security risk which comes along if you have an account and it's not an account by a bank in Germany, but an offshore bank, or even an account which is not in your own name, but just an escrow account from the exchange itself. And the wallets you have where you don't have a direct access to your wallet. So what will be the future then? How will this evolve over the time? What we see at the moment is that the exchanges, and they are the one that are making money at the moment in the crypto world, that they are more bundling offerings into their services, starting from having more content, more information into it, and they're starting to integrate more and more DeFi products like lending and borrowing, and they try to build up their service on that. And we were already seeing heavily merchant acquisitions from exchange going into these segments as well. But what can happen is, of course, that we will see integration of these services, and this is already happening. The first offers we have in that regard are basically on offerings for crypto exchange, where you can open via an app a banking account and then have access to an exchange, mostly a bilateral access to that. There's some retail products in the market where you can access that. We ourselves have with Bison within Börse Stuttgart Group one of those products where you access that via a broker. But we will see banks integrating that, and that makes totally sense, because what the customer wants to have is a one-stop shop where he finds not only his traditional asset, but also his digital asset, where he has the content and where he has access to DeFi world as well. But this will take some time because the regulatory burden for that is very high. As you know, maybe in Germany we have the custodial services, which is regulated under German Kreditwesengesetz since last year. So that's not an easy thing to do, but that is something we will see in the future. The other pathway which lays ahead is, of course, the unbundling of all these services, beginning with the custodian services, to have your wallet service elsewhere by a custodian with the services which go around You will have probably the DeFi world then accessing directly the innovations which are taking place in the DeFi world, like lending and borrowing, automated market makers as a decentralized exchange in comparison to a centralized exchange. All these things happening, and there will, of course, customers who will want to have a direct access to those innovations and don't want to wait until it's integrated into their service, whether it comes from a bank or from an exchange. But however, as we see it now, the customers are quite lazy and they are used to the experience at the exchange. So they are not that eager to change at the moment. But as the service evolves, especially the services from the trusted brands and from the venues they use at the moment, I think we will see that more people then will look away to get the access, get into the DeFi world and the cryptocurrency world via the venues they have from the beginning, which means the traditional bank's account. And of course, that is something we're working on at Börse Stuttgart Exchange to enable our partners to integrate crypto offerings into their portfolio. If you have questions on that, of course, we can, in the discussion, we can dig deeper into that. And of course, you will see my contact details. Happy to have a direct exchange with any of you who are interested in more how this path will look like and what the service of BSDAX and Börse Stuttgart Group fits into that. But then let us go to the second part, and we as the time we have, we can only quickly rush through it, but I think it's quite intuitive to go to these points. It's not that they are all wrong, it's all misconceptions, and there's all critical things to discuss about Bitcoin, but in doing so, I think you will better understand why there's so much enthusiasm with cryptocurrencies. But we have to make this quick. Jan, I don't know, how much time do we have left?
Yeah, you have 2 more minutes.
Oh, okay. So what we often hear is it's not backed by anything of value. Well, you can say that's basically the idea of money. Fiat money basically is not backed by anything but the general acceptance of it. And for gold, it's pretty much the same. Gold is not backed by the property of gold is scarcity, fungibility, and durability, and that is Bitcoin has in common. So I think that is something which is pretty clear. People will say it's just a bubble. That was true 4 times, and maybe it will be for 5th time as well. We have seen 4 major cycles in Bitcoin history, and within those cycles, the value grow with a factor of 10 or more. And after that, we had a drawdown of 80% or higher. So it's not a one-hit wonder we have here. Probably there will be dips again, but I'm pretty sure. But after each dip, it will come back even stronger. The governmental distrust, will government shut down Bitcoin? Of course, that is a risk to it. But from my perspective, it's far too decentralized by now for a single government to shoot it down. And if any government will try to shoot it down, there will others who try to arbitrage on that and seize that opportunity, because there's already so much industry into Bitcoin that this will not be something which a single government or EU or the United States itself could try and tackle. It's used by criminals. This is not that true in the extent as it's always told. It's probably less than 1% over the time. It's going down anyway, since the on and off ramps are becoming more and more regulated. And most importantly, distributed ledger technology is compliance by design, because you have a full audit trail within the blockchain. It's not anonymous, it's pseudo-anonymous, so you know each wallet address which is went through. So there's plenty of ways to monitor and protect from money laundering. Volatility, true, it is very high, but as Bitcoin is maturing, volatility is going down, and if you see the market size is still high, but the market cap, but still magnitude is lower than other assets with a global reach. So as this will grow, volatility will keep decreasing. It's not a currency. Well, that is if you say it's true for gold as well. Bitcoin lacks, of course, 2 of 3 fundamentals of a currency, which are a medium of exchange and a unit of account. But that is true for gold as well. And I think medium of exchange Bitcoin is better suitable than gold is. And so as Bitcoin will mature, I think it will also be a better unit of account as volatility goes low. Waste of resources, yeah, true, but there ain't no such thing as a free lunch. And security comes as a cost, and the energy consumption of Bitcoin reflects basically the security mechanism which is incorporated into Bitcoin. Besides that, the miners heavily rely on renewable energy. So I think that is something in the old world you would have to consider as well, what energy consumption and cost comes within the fiat money system. It does not scale well. 5 billion transactions a day is not nothing. As of now, it does not serve as a micropayment use, and it was thought in the beginning, so sort of pivoted into the way of a store of value. But we have innovations here as well, like the Lightning Network, which maybe in the future will even have use cases in daily transaction schemes. It can't be cloned, some might say, because just software code. Yeah, that has been tried since over the last 10 years, probably, to clone Bitcoin, and so far nobody was able to establish another currency as a store of value. So I don't see that happen, because you clone the acceptance and the global distribution of Bitcoin. And the last point, it gets hacked. Well, Bitcoin has never been hacked. It's the exchanges which got hacked, and they are vulnerable. And you have to keep in mind the risk vectors are higher than in fiat, because if the keys are lost, your coins basically are lost. But that's probably why we're here today, to discuss that, and how an exchange which is set up properly, and how custodial servers can help in that regard. Thanks.
Wonderful, thank you. So one question from the audience, we only have time for one here. What do you see in terms of investor adaptation? Do you only see Bitcoin at BSDEX, or do you also see other tokens?
No, we at the moment we have, beside Bitcoin, Ethereum, Litecoin, and Ripple, and we see that probably 80 to 90% of our investors are invested in Bitcoin. Of course, over the last week, we have seen a massive growth in Ethereum. The memes I discussed, that Bitcoin is a store of value, I think that is something which allotted mostly to Bitcoin, and the value of Ethereum is totally different to the ones than Bitcoin. So I think we will see coming other, like Ethereum, other DOT technologies with coins and native coins becoming more and more important. But that not in the term of store of value, but because they are underlying a certain business model which operates on that. For the future, I think the digital asset securities, tokens, tokenized asset, and in Germany, the elektronische Wertpapiere, we will see that happening on these digital venues in the future. And I think that's why we are so bullish about, and that's why Börse Stuttgart went into that. It's not only about Bitcoin, it's about digitalizing of assets.
Nice, thank you. All right, thanks a lot, Jan, for the intro. And yeah, now next up is Maerki, Baumann, Milko, Hensel. Can you share your screen?
Yes, will do. Thank you.
Thanks for being here.
There it is. Oh, you should see my screen, I hope.
No, we only see your name now. No video.
That's nice. Not good. So.
No, it's the. Yeah, now we can see the screen. Wonderful.
Very well. Good. Thank you for having me here. just want to give you a brief overview of how it came that we, as a traditional private bank, started into this crypto world, and also share some of the insights that we have from our discussion with clients, potential clients, investors, and also companies that want to start in the new world of blockchain with their project, and to give you some ideas of the resentments or the insecurities and the pitfalls that are true both for private investors, but also and foremost for the institutional investors. So I will focus on this kind of clients or investors in the first place. And you may know that Switzerland is, with regards to regulation, a bit ahead of EU and Germany, and probably one of the leading countries in the world when it comes to providing a regulated environment to companies that want to do business in cryptocurrencies. But this does not mean that in Switzerland institutional investors already flock in masses to this new asset class. And I want to give you some ideas about why this is the case, because there are the usual questions, and what we experienced in our own world, and me in person as well, is that we had to overcome some resistance as well when we started to go into crypto in 2018, when we were surprised by the demand of companies that need a current account, that need a support in the banking industry, for the ICOs, for the SCOs, and also now we still have, especially with those colleagues that are new to the bank, say, okay, I'm a little bit conservative, I'm a little bit hesitant to accept this new asset class, but we constantly work on evolving this and informing the people, both inside the bank, but also outside. Because this is the start, this was the start of the discussion as well as us. With us, digital assets are too risky and too dangerous. Jan outlined quite impressively some of the arguments that you usually hear, so I don't have to repeat them here. But what we see is there are, of course, dangers and risks, but this comes with the same comes in the same way with traditional assets. If you don't have any idea about equities or bonds, then you better stay away from this, because you lack information. And the same is true for cryptocurrencies or generally digital assets. The difference may be that you have to consider more than with equities or bonds. You don't have just to check the investor, but you also have to have in mind that there is an underlying technology that needs to be considered, that needs to be safe. You need to see what implications it may have on your overall asset allocation. Is this a favorite, or does it not help? And for us, I think the central point is really get informed, learn about it, try to learn, try it out, and then security will come, reliance in the system, understanding of the differences between the various currencies. Because at the moment, many people just associate Bitcoin with digital assets. Whereas if you have a more detailed view into these developments and into this new world, then you see the distinction between ETH and Bitcoin. You see the difference between Polkadot and USDT or Tether. So this is something that would come only when you are interested in this new asset class, and then you will see what positive effects this may have and what is the right way of investing for you. So going a little bit deeper, we often have with these with the more conservative clients, we have the question, the discussion that digital assets are just a tech fund. They're just for people either that are heavy trading that want just to profit from the volatility, or that it's just for learning, trying out technologies, what does work, what does not work, but actually it is something that is really should be taken serious, and here comes the point that I wanted to make before. We have low correlation to other traditional asset classes, so there is a point in investing in this asset class. And on the other side, it is important to see what you want to invest in. Do you want to have really an asset class as an assurance for your portfolio, or is it something that you are interested in from a technological perspective, or from a general perspective in changing the industry? There's so many good projects, projects that have high ambitions, but they are all thrown into the same bucket as there are cryptocurrencies, which is not true, and not for there's a good reason why the regulator distinguishes between three kinds of token: the payment token, the utility token, and security token, because they have different ambitions and you have different rights connected to these tokens. So if we overcome this resistance that, okay, I know I have to learn more about it, and that may be interesting, the question comes, why should I invest in digital assets as an institutional investor? So it may be fun for techies, it may be fun for private investors to play around, but I as an institutional investor have a responsibility against my clients, my board of directors, and therefore I have to be more careful and cautious. This is true, but first of all, even if you are cautious, then trading in digital assets may bring additional revenue return to the portfolio, and a broader variety of returns to your portfolio. Most of the tokens that we see today don't earn any yield so far. Most of the profits come from trading, buy low, sell high. Whereas with staking developments that we see in the ERC20 world, there is a possibility that you earn regular returns on your holdings in Ether or other proof of stake oriented blockchains. So we see there a huge potential for also institutional investors that want to have a more or less safe haven for their surplus liquidity, but also want to have something that earns a certain return. And with staking returns, this may be a good idea for the more venturing investors. And what we also see is there are some institutional investors that are really coming from the venture capital area that see, okay, this is an interesting project. They have a good chance to be one of the unicorns of the world, but unfortunately they only provide token and not really hard participation in the company. To some investors, especially those that are embrace the crypto world and blockchain technology, they do say, we accept this. However, I have to also state that many venture capital companies, they do not want to have a token. It's too risky to them. They still feel it too little reliability on the regulation. They really want to have shares or any other investment agreement that gives them preferential rights into a new company. So the next thing is also what Jan stated before. You don't need a bank to trade in digital assets. This is true, and this is especially true for private investors, where especially those that are familiar with technology and are happy to go the way with setting up their own wallets, their private keys, their seeds, etc. However, if you think of a company that wants to invest, Do you imagine they will throw their hardware wallets into a safe and lock it away? Or who has the list of all people that have access to this? And therefore, if you go institutional, we believe that you have to think about it in a different way, especially established companies really want to know who has access to these wallets, who is allowed to transfer things, and usually the majority of the wallet solutions that you have only allow to a certain extent the details and the security that an institutional investor requires. And there comes again the role of the banks, such as us. And because what we can provide as a service, at least we at Maerki Baumann, and what banks in general provided traditionally for centuries, was safe and accessible storage of wealth. And with the solution that we have developed is that you have, on one hand side, you have your assets on the blockchain, they are secure, stored away. And the other side, you can have the quality and the solution and the accessibility that an institutional investor needs, which is multi-signature. You need to have a solution in case of bankruptcy of the company or the company that you entrust your assets to. You need to have rules and regulations on who can access it, who can place orders, who can execute transfers from these wallets, etc., etc. So these are things that are more important to institutions than to private clients, and we see that this is an evolving now, and there are already technological solutions that provide these necessary additional services. And we think that it's a good way to add the security, to add reliability to this asset class, and to take away more and more of the resistance arguments that keep institutional investors away from this interesting asset class. So now I convinced you that you want to have cryptocurrencies, that you are interested in token projects, that you want to support blockchain for the benefit of mankind. But now the question is, what should I invest in? Is it Bitcoin only, or is it something else? And we, in our discussions and in our advice that we provide, is we come from the point of you may know from your private banker as well. It's a question of your risk appetite. What do you want to invest in, and how does the rest of your investments look like? So if you are highly geared in technology anyway, you may be not the right company to invest heavily also in cryptocurrencies. Or if you are more or less a conservative investor as an institution, then a bit of cryptocurrencies may be of interest. If you're a long-term investor, you may believe in the projects that are just starting now, and you don't care too much about the volatility of the price. You just want to participate in this project and want to invest in a long-term perspective into new blockchain, into meta blockchains that connect other blockchains, in solutions for transportation, solutions for fraud prevention, etc. All these projects are at the start or are already developing in a good stage, and having all this in place gives us and institutional investors a good way and a good choice of different investment possibilities that are at hand, and that may be considered in a very individual way, so that you don't only have to go to Bitcoin with 3% as the standard recommendation is. You may read. Good. Therefore, what we, to come to a close, I would say there is, for institutional investors, it's the question always, who is convinced of this new asset class? We don't have to preach to the believers, So what we know is that we have to convince those that are the decision makers. And to be honest, most decision makers are beyond 60. They don't want to risk too much. And what we can provide is neutral advice to all this and say, look, we came from the same conservative area. We learned how to go to cope with these risks, and we still learn quite a lot every day with the huge fast developments here we see in this area. But we can give you an advice how to approach it, how to understand it, how to see what the benefits of this are, but also what the risks are, and to make it transparent in a way that you may not get if you only have access to certain online groups like in Reddit, etc. This does not convince the decision makers in institutions. They need data and facts, and in a way that are understandable to them. And to be honest, as conservative as banks are, we know how to sell to conservative people as well. So, just one or two final slides. We are a reliable, secure, and regulated Swiss private bank, so you can come to us. And I have to say, as we have many many visitors or viewers from Germany, we do not offer in Germany custody at the moment. As Jan and already lined out, and most of you know, there are restrictions on providing custody services to private and institutional clients in Germany. However, for all other clients around the world, we can offer custody trading and advice to you. Thank you for your attention.
Yeah, wonderful. So one question is, how do you get educated? Like, what do you recommend as first steps?
One thing is to really understand the basics of the technology in the first place to a certain extent. Don't go on the code level. That does not help too much. But really understand how the asset class behaves. How understand what the differences are between Bitcoin and Polkadot, for example. What is there an evolution during these years of technological development? And then, of course, talk to somebody who's reliable and knows this. We learn very much from our clients, and our clients learn very much from us in discussions. Join video seminars, join online forums. These are ways of learning, and then in the end of the day, you have to make a guess on your own.
Do you have any plans for coming to Germany or offering these custody services here?
Yes, we are in active discussions because this custody solution is pivotal for us, as we provide an integrated solution to our clients. So if they log on in the e-banking, they see their shares, they see their bonds and funds, and also their bitcoins and ETH. However, we can't offer this to our clients in Germany. We can advise them on that, but we only can tell them you can buy structured products on it. You can buy funds. This we can advise, but we can't tell them you buy a Bitcoin and then they will show up in your security account. This is still a lack of service that we have, and we want to fill it. However, before that, the BaFin has to make a decision on how to handle banks, and we are quite unique. I mean, we have access to the German market. We provide custody around the world for digital assets, and we are regulated in Switzerland equivalently to Germany. But I think we are a different kind of unicorn because we are the only ones that are in that position, and therefore the BaFin has not yet made up its mind of in which category we fall.
Yeah. And last question, what asset allocation to crypto assets do you usually see?
There are two groups. One is the experienced one. They have 80 to 100% in digital assets. they know how to trade and they play around. And there are others, the more conservative ones, I would say 2, 3, 4% in this, and we consider this as an appropriate way, depending on the risk appetite. Of course, you can start with 1% and then increase to 10%, depending on how much you like to invest and what the market situation is.
Yeah, thanks a lot. Thanks a lot for answering these questions. Looking at the time, I think we should move on to Simon. So thanks, Milko, for your presentation. And Simon, can you share your screen?
Yes, give me a second.
Wonderful.
Perfect.
All right, so this is the last talk for today. If you have any questions, keep posting them and I will bring them up.
Perfect.
Time is done.
Thank you very much, Jan, and also thank you to the speakers before me. I think both the Börse Stuttgart and Maerki are both in their own right pioneers in our industries. And I'm very happy to talk to you today about custody risk, and just 2 words to how I've designed this quick speech is designed in a way that if you are a financial institution, so a family office, an asset manager, an investment fund, I will give you a rundown of the 3 most fundamental questions that you have to answer when you set up custody. So I want that you have a high level full understanding of all questions that really play in this game here, and where or where not you have to watch out. So first of all, who am I? I'm Simon Peters. I'm the managing director of Decus Network. And if you like, you can add me on LinkedIn. I will bring up the same QR code in the end of the presentation. So if you miss it right now, don't worry. Before I start, I want to explain the angle that we're looking at this problem. So we at Decus Network, we see the market like that. There's an extremely profitable market that is extremely fast evolving, changing every day, with hundreds of providers when it comes to custody, when it comes to exchanges, when it comes to blockchain protocols. And now you as an financial institution sit there and you want to engage with that market, but you aren't sure how. Decus Network is we call ourselves with a single one entry point into this market that stays flexible, even if the market and the technology in the market is changing. So this is the perspective that we have. And to kick it off, I brought you a quote that is exactly 1 month old. It comes from Vitalik, the founder of Ethereum. So besides Satoshi, the founder of Bitcoin, he's one of the demigods in our pantheon of our little universe here. And it just says about 1,500 Bitcoins may be lost every day, just lost, not stolen. They're lost because people cannot access the custody after more because there have been a mistake, there have been a key loss anyway. That might add up to up to 20% of the total supply. And the importance of wallet security, the importance of the wallet security problem is great, and it should not be underestimated. So this is 1 month ago from the founder of Ethereum. What I want to make clear is that the custody problem or the custody topic is not finally solved. We will solve it, but there are questions that are still open and tech is still evolving. That's my clear message here. And all risk finally comes out of decisions. So I wanted to just look quickly and run down what are the 3 decisions that you have to make if you want to set up custody. And the very first decision is an investment scope. Do you want to become an integral part of the system? Do you want to have an own service system? Do you want to have own tech that hosts and secures coins under an own license, which will probably, which would of course will be the high end of the investment scope? That will be, you will take a lot of money in your hand to set up this system. You will probably invest a lot of money into your license, and you will have a burden of maintenance. You have to take care of the tech. On the other side of the spectrum is a very simple cloud solution. You go to a custodian that already has a crypto custody license and offers you an internet-based, cloud-based solution, and that person or that organization will also take care of the tech maintenance, and that will be of course a low setup cost. This is more okay. We want to engage in the world on a cloud-based solution, and an on-premise solution is okay. We want to be this world now. We want to be a future like a massive pillar in this world. The next question, which is basically the question that Vitalik was mainly concerned about, is the question of technology. And if you look right now in the market, you will find 3 things repeatedly. You will find the HSM, that's the hardware security module, is also known. You probably have seen that that's the ledger when you have this USB stick device. That's an HSM, and what it is, it's encrypted hardware. So it's very important. This the way how it keeps your coin safe, it's a hardware way. They have a chip that produces real entropy, so it's a real random number, and by that they secure it. They're very battle proven. They've been certified for financial use, so it's the standard that we have more or less. There's only one risk, main risk concern with HSM is they run securely, but it's a supply chain risk. As it is hardware can be corrupted before it enters your system. So that's the one thing that we have to keep in mind here. The other solution that is often advertised is the MPC, the multi-party computing. So what we see here is, or the idea is, a key that doesn't exist cannot be stolen. So let's get rid of the key. So what they do is they split off the key and give them to different parties, and the key is only assembled and brought back to an existence when the different parties come together. And it's a very new technology. It's what kind of is pushing right now into the market. What comes more and more up, because the logic is just so right. Something that doesn't exist can't be stolen. It's a very obvious logic. There are also a few new ideas that are coming around MPC when it comes to social recovery. So the idea that the other parties that have the key might not be institutions, but might be family members of mine. And lastly, there's cold storage. Cold storage is also something still advertised. I wouldn't say it's the oldest technology, but it's kind of the one of the earlier approaches. It's definitely secure against online attacks, but it's hard to scale up, and it involves an operational risk. So if I ever hand my keys offline, I mean offline things can also happen. So this is one of the big things that Vitalik was talking about. He likes MPC, but I'm very, very sure it's not. This is a snapshot. New technology will come up. A new tech will come up. And the last, probably bigger question that you have to ask you now as an institution, okay, I know on-prem, cloud technology, okay, I've looked at that. Of course, you have to ask yourself what kind of license do you want to have. This is, of course, very, very individual. It depends very much on the organization. How do you see yourself? But in general, depending on a licensed custodian gives you a higher degree of dependency, but will also come at a much lower price tag compared to having an in-house license. And of course, having an in-house license in crypto custody also brings this risk in your house. And walking back to Decus network, we have spent the last year just thinking about these three questions again and again and again. How do we can solve that? And I think we have found a neat way to do it. What we basically do is, when it comes to an investment decision, we definitely have put us on the low cost end. We are SaaS setup. You can set up in a few hours. When it comes to tech, and I think this is the big innovation that we have done here, is we say, don't worry about tech. If Vitalik says he isn't sure which wallet system is finally the correct one, then none of us can know it. So we have built a system in which you can see the custodian as the engine of your security. You can replace that engine, and you can be independent across nations. So we have heard from a prior speaker that there is no current offering in Germany, for example, for custody. Given if you have a Decus system, and given you cooperate with the right custodians, you could simply set up a German operation by simply going into a system and adding a German custodian. Same you can do for the UK or France, US, or of course, I mean, there's the legal barriers that you also have to consider, but from a technical level. And when it comes to the legal part, of course, that depends on the organization. What we have built, we call it the asset panel. See all your assets, whether it be client assets or your own assets in one point, create rules and permissions to work in a team, connect to 30 exchanges and access deep liquidity, and of course, export your reports for the tax audit. And if this was by any means relevant, if this is something you have been thinking about, if this is something you have a question about, really feel free to add me on LinkedIn. I'm very much available to answer questions. I'm a big enthusiast, way beyond my job for crypto and Ethereum. So I'm happy to answer questions.